Hi everyone, welcome to Accounting with Morgan, and this is the last video for cost classification. And so in this video, we're going to be looking at cost classification by behavior. When we classify costs by behavior, we're looking at how costs respond when production or sales volume increases or decreases. Do they stay the same? Do they rise with output? Or are they a mix of both? We group them into three categories: fixed, variable, or mixed. So let's break these down. First, we got fixed costs. These don't change no matter how much you produce, at least not in the short term. So whether you're making 10 units or 1,000 units, the cost stays the same. So examples include rent, insurance, or salaried employee wages. But here's the catch. While the total fixed cost stays the same, the cost per unit actually decreases as you produce more. Next are variable costs. These change in direct proportion to your production level. The more you make, the higher total costs because you're using more materials or labor. For example, if you're paying $5 per unit and materials making 100 units would cost you $500 and 200 units would cost you $1,000. The per unit cost stays the same, but the total cost goes up with output. Then we have mixed costs, also known as semi-variable cost. These include both a fixed part and a variable part. For example, your phone plan might be $50 flat per month plus 10 cents for every minute you go over. Another example could be a delivery service that charges a base fee plus a charge per mile. Mixed costs are a little trickier, but we'll show you how to work with them in practice. So let's say you run a small t-shirt business. You pay $30 a month for your website. That's fixed. You pay $5 per blank t-shirt. That's variable. And shipping fees are $3 flat plus 50 cents per ounce. That's a mixed cost. Being able to identify and separate these costs are crucial for pricing and profit analysis. So this is the first sample problem, and the main objective is to classify each of the costs. So don't worry too much about the numbers, just see if they are fixed, variable, or mixed, and I will give you some time to think about it, and you can also pause the video. Okay, so I hope you're able to think about that. So here's your answer. Warehouse rent is fixed because you pay the same regardless of output. The $4 per item, that is variable because the more you make, the more you spend. And then the phone plan is mixed because there's a base cost plus a variable element depending on usage. Here's another question. A company pays $2,000 per month for equipment and $3 per unit for materials. They produce 100 units one month and 200 units the next. So which cost stays the same in total and which cost changes as production increases? And you can pause the video to think about it. Okay, so here's the breakdown. The equipment cost is fixed, so the $2,000, no matter how many units are made, is the same. And the material cost is variable. So you have that $3 per month, and it's going to be $300 for the first month because you have 100 units times the $3, and then $600 for the second month because you have the 200 units times the $3 price. So that wraps up our lessons for cost classification by behavior and also just like the classification series. Next videos will be about different costing methods. So we'll have job order costing, process costing, and activity-based costing coming up next.